Hello everyone, welcome to the Ichimoku charts.com daily analysis for gold for Thursday, September 27, 2012. Well, a change of trend again today and a candle with a higher high and a higher low. Previous day's trading, the trend was down, and we have the market chopping and changing in the first time frame down from a downtrend to an uptrend to a downtrend. So quite often at the moment the market can't hold a trend for more than one day, and we have the market within this largish congestion area, which I'll discuss in a minute. But back to this candle, a very bullish candle and a very large white body candle, and could be quite an important candle. If we look at the character of the candles that we've seen trading for the last couple of weeks, they're all smallish bodies, a mixture of black and white bodies with largish shadows on the top and the bottom. And this candle is quite different. It's a very large white body candle, and it seems to me that at the moment the buyers are now attempting to take control of this market. They found very strong support down below the 1755 area, an area that was tested on quite a few occasions. Yesterday we tested a fair way below there, but the market failed to close substantially below there and closed roughly at that level, and we've bounced off that level in a major way with the buyers taking control of this market today. We are trading within this zone of resistance that extends up to the 1790 area, so we do need to be aware of that. So be quite cautious of placing any long trades. But if we look at this pattern now, it is starting to now look more like a megaphone pattern, not very as well defined as we like. We have some swing lows and a couple of swing highs in here that don't meet the boundaries, but the major peaks and troughs in this pattern are conforming to a megaphone pattern. They tend to be 5 points. They can go on for longer than that, but 5 points is the minimum. And here we have point 1, 2, 3, 4, and then the fifth will be up around perhaps the 1800 level. So we could see the market rally up through here. If we see the market find resistance up around the 1800 level, we could then see the market trade off and break down through this lower barrier and test to lower levels. Now these patterns tend to be reversal patterns. They don't tend to be continuation patterns, so it's more likely, if we do see that breakout down below this lower boundary, that it would be a reversal. But they're very unreliable patterns. They're very hard to define, and they don't tend to be reliable patterns once we get the breakout. So we do need to be aware of that. But it is conforming to that style of a megaphone type pattern, and the reason why they tend to be reversals is that we've had a long rally here. We've had a very, very strong second time frame uptrend in this market, but then we have this confusion of the buyers taking the market higher, but then the sellers actually taking the market lower and having the strength to take the market past these previous troughs. And that's the reason why it's important that you tend to see a lot of volatility at major highs. Now in terms of these patterns, however, they tend to be major reversals and reversals of major trends. This is a significant trend, but it's certainly not a major trend in bigger picture terms, so we do need to consider that as well. In terms of the Fibonacci extension, we're looking at the market trending up now, so we're examining the relationship of the first time frame uptrend to the previous time the market was trending up. And today, in one move, we've taken out the 161.8% level, and it's likely that the market will test to the 261.8% level or beyond. That's at 1790, and it coincides with this swing high within the pattern. So that makes that area even stronger as potential resistance for this market. Looking at the Fibonacci retracement of the prior downtrend, and the market has tested in a bullish manner above the 100% level at 1777, so there is potential for the market to trade higher. We do have a target now up above the strong resistance area at the 161.8% level, which is 1802, so it coincides with the round number resistance at 1800, so that could be an important level, and that also coincides with the top barrier of that megaphone pattern. And here we see the barrier at the moment. It is trading up there roughly around the 1800 level. Now in terms of Ichimoku, bullish market in all three time frames. So the market's trading above the cloud, so we're bullish in the long term time frame, trading above the Kijun-sen, so we're bullish in the medium term, and then above the Tenkan-sen, so we're bullish in the short term time frame. The test below the Tenkan-sen here was not significant. We did close below there, but we had very strong price rejection from lower levels, and a candle where the sellers failed to maintain control of the market throughout the trading day, and the buyers took control. So that did set the market up for this change of trend, and it suggested that the buyers, even though they did trade below the Tenkan-sen, they were still very, very strong in this market, and this suggests that this market will trade to higher levels, and perhaps the market has potential to trade higher than the 1800 level of resistance. Just bear in mind though that we do have that strong resistance at 1790 before we trade up there, so watch that level, and then also watch the 1800 level. If you do see strong downside price rejection from there, then this large pattern will come into play, and there is potential for a reversal, but we do have very strong support down below where the market's trading within this pattern as well, so that will negate any potential breakout to the downside. So overall, a bullish market, strong potential to test to 1790 and then perhaps 1800.